Hi, everyone. Welcome back to the Investipal podcast. Today's guest is Kabir Sethi. Kabir is a seasoned wealth management executive who's helped steer the ship at several large wirehouses and most recently worked as the chief product officer at LPL Financial before leaving to do his own thing now, where he is applying some of that knowledge and background to help build in the world of wealth tech. Kabir, thanks so much for coming on.
No, you're welcome. Thanks for having me, Cameron. Good to be here.
Maybe to kick things off, be curious just to learn about your background and how you got into this space to begin with.
Sure. I guess like many roads, right? This wasn't exactly a straight journey. It's a bit of a long and winding road. And I started my career in consulting, and then when I joined Merrill Lynch originally. I actually joined in investment banking, and then in 2008, when Bank of America bought Merrill Lynch, that was when they decided to launch a business that is today called Merrill Edge. The goal being to target the mass affluent customer base and to build an investment offering around that segment. And so I was lucky in retrospect because I got moved into that business. It was a lot of fun. Then did a stint in the Bank of America Consumer Bank doing a lot of digital work. And then moved to Merrill Lynch to run what we call digital wealth management. And I think that was the time when I got really interested in the space, because that role was essentially running the advisor and the end investor platform. And, it gave me this really deep sense of how technology, the interplay between technology and financial advisors, which is obviously a deep relationship-based business, right? And so that was when I think this whole idea of technology and wealth and just wealth overall started to become really interesting to me. The stint in LPL was similar. As chief product officer, I ran the platforms, and then I ran investment and banking and lending products as well. And then, as you said, it became fairly clear to me that I wanted to stay in this space. And, coupled with the fact that I do believe, like many people, that we're at quite a pivotal moment in this, in the world in some sense, in terms of what technology can do. But I don't think wealth management is any exception, and I'm sure we talk about that. So that's really how I got here. I mean, engaged with a couple of wealth tech companies on their boards, really interesting companies, and we can get into that as well. But, that was the background, and that was my journey.
Maybe to double click on the time with Merrill, I'm curious your thoughts on, or like what the advisor affinity was to adopting technology, because it's like traditionally a relationship driven business, and then you try to throw in technology to both help the advisor, help the client out. Was there a lot of pushback at that time and saying we don't need this, or was there like broad acceptance?
I think I'd characterize it probably less as pushback and more as inertia. This is a notoriously different. Changing behavior is always hard. And if you're going to ask entrepreneurs to change the way they do things, especially entrepreneurs who are frankly quite successful, no one wants to risk any kind of disruption, right? And so if you show up with something as simple as a mobile app e-signature capability, they will, at which, you can give them all the business cases around eliminating paper and friction and saving time. But, if the paper-based version is working well, especially with a high net worth or any client base, you are going to get to some extent resistance, but more, like I said, it's just slow adoption. And I think that's one thing that, regardless of the kinds of technology that's out there and what gets rolled out, I feel like sometimes people miss, which is, getting this industry to adopt new technology, getting them to actually do, no matter how amazing you and I might think it is hard, and it takes work. It takes a focused effort. It does not happen by itself. And that was, I think, the essence of what, it was a huge learning for me at that time when we rolled out stuff.
So if we were to fast forward over, I guess maybe with just all of your background, was there ever a criteria? I'm sure you got pitched by vendors constantly. What some of the decision making might have been when evaluating, should we build this or should we partner with a company to buy it, essentially?
Yeah, it was much of what you might think, and I think a little more extreme because when you're in a large company, they are by definition more conservative, right? So, just out of the get-go, whether they say it or not, size would play a part, right? You would be very careful. 15,000 advisors. You're not going to risk that experience on an unproven or a sort of close to proven technology. Security, compliance would be huge factors, right? People often ask me why the process takes so long in large financial institutions to onboard a vendor. And a lot of it is because of all the different milestones and gates that they go through. I mean, you could argue that it could happen faster, and I think it is starting to happen faster in some companies I'm working with, but that's another piece. I think you'll notice that as I got into those first two criteria, I still haven't got to okay, true quality of the technology, right? And that, which you would think okay comes first, but I think the ones I mentioned come first, and quite often you will see these big companies deciding to go it alone and build something themselves. Um, that a lot of that comes from the fact that they're just not comfortable dealing with the really small companies. So those criteria, giving them confidence in the capability, giving them confidence that you're going to be within their compliance framework. Quite often, in fact, almost all the time, it involves a lot of custom work with these large institutions, right? Because they want things on-prem. They're not going to deal with external data, things like that.
Thought was really interesting in like some of my own discussions is a lot of I found the mid-sized firms
Mm-hmm.
are attempting to build not everything but attempting to build some of their own tech stack out, and it wasn't for that reason. The reason was PE has flooded into the RIA market, and we believe we can have a bigger multiple when we eventually sell the company by having our own technology. Curious to hear your thoughts on like the approach as like someone who's been on the product side at several financial institutions. Maybe what factors that CTO or CPO should take when considering is this worth the value to actually build it in house?
Yeah, you're right. I mean, I've heard that as well, and I think with the mid-sized companies, one of the things I tell CTOs, friends of mine, quite often is, look, um, really understand what you're getting into, right? This building a tech stack is not for the faint of heart. And I think the second piece, especially in this day and age, right, and you live this all the time, is integrating with third-party capabilities is not what it used to be like a decade ago, right? I mean, it's a much more efficient process. There's a much wider array of capabilities out there. So, as you're thinking about the tech stack, the other piece that I keep telling them is understand what you want, right? I mean, we all know the core set of capabilities that a wealth management platform needs, and and we're fairly close to all-in-one or close to all-in-one platforms that provide that whole spectrum of capabilities. And so I do think, getting into building your own tech stack, as you can, guess from the way I'm saying it, for a mid-sized company, I think you need to think pretty hard about why, really understand the reasons. Because if it's going to be security, it's going to be controlling your own data. I mean, there are more and more solutions out there that can help you with that.
Yeah. And then to come back on a previous point you had around the building around the inertia, obviously seems like WealthTech's growing in popularity from the builder side, but also from uh, wealth firms trying to invest in it.
Hmm.
What do you think the end state is here? What do you think like the end product, if we fast forward 5 to 10 years, would look like from a digital experience viewpoint?
I think, if I had to sort of put it in macro terms, I do think, and maybe that won't even be the end, but I think where we're going to get to is platforms enabling or advising the advisor to do a lot more. I know for years now, this industry has talked about insights and feeding client insights. I'm not talking about that. I'm talking about, you actually, the platform actually telling you which clients to call or where you need to think about, reviewing a portfolio or what that call even should be about it. Really directing advisors and team. Um, I think we will almost certainly get to that stage for two reasons. One, the quality of the technology, right, and our ability to do that. And two, there's not that many new financial advisors coming into this industry, but demand is going to continue to grow. And so you have to have a different way of managing your client base, because you're going to, especially a successful financial advisor will be looking at very different gear. One thing to manage 30, 40 different households, another thing to manage 200. And so I think, people talk about agents and they talk about sort of the power of like an agentic platform, etc. I feel like we will get to that and keep moving beyond just, okay, the platform filling up onboarding forms and trading the money. I think the platform will actually start giving the advisor guidance on what to do. I mean, it's a pretty fascinating future when you really start thinking about it.
Definitely. And I feel like the pushback is the acceptance of having that agent have a role in your firm. Like when I got my start, I was an associate in capital markets, and my boss would not listen to me at all when I first started. But then over time, he might not admit it, but would listen to some of my ideas. But that takes like 12 months. Um, in the wealth world, do you think the focus would end up being on that younger generation of advisor who needs to be more adaptable for their practice, or those like large incumbent books that might be like $1 to $2 billion in size, and it's like a cost efficiency viewpoint where they don't have to hire as many people on their team, whether
Mm.
that's because of their own operational needs or because there's not as many people entering the market in general in wealth?
Yeah. Yeah, I think partly the younger generation of advisor. I also think that a lot of it will come from a younger generation of clients, right? I mean, I think we underestimate just how different behavior is related to machines with as the generations grow younger, right? I mean, people are growing up, or I mean, my kids have grown up in a way that, as you can imagine, there's no way I grew up, and I know we hear this from people 50 times a day, but it's true. And I think, and similarly, as you said, when you have younger generations of advisors, the way they interact and use these capabilities will be very, very different. Um, I see that even when I talk to advisor teams and you're talking to different generations, right? And you're talking to, let's say, the parent and the child who's moved into the practice. And yeah, I mean, in every business, different generations think differently. But over here, the main difference is that relationship to technology and how you can use it and how you can look for efficiency. So I think it'll come from both a different type of advisor and a different type of client. And then to the point we made earlier, at some point, it's just going to be necessary, just based on efficiency and managing your house.
Yeah, it's been a common theme of discussion on the podcast with previous guests, whether they are like yourself, who are more on the technology side, or I'll call it more like technologist centered advisors. But like what that future state could be, because in some cases, actually, I feel like in a lot of cases now we see people rely or trust ChatGPT incessantly. They don't fact check it; they take it at face value. So that like Gen Z, Gen Alpha crowd as they get older, do you think they're even going to want to talk to a human, or it's going to be entirely
I
robotic?
think I sort of tend to think, look, I mean, 10 years from now, and with some clients, you're probably going to have people who can just, you know, interact with the machine. But I mean, there's also varying levels of complexity in people's finances. And some of it, the relationship especially with good advisors, gets to, well beyond just finances, right? And so I think it'll probably be a mix. I know that's a bit of a hedge. I do think the mix will skew more towards machines and technology than ever before. No question about that. Um, and as far as advisors themselves trusting the technology, I mean, that's hard, like we were saying. But yeah, I mean, take an example like one of the companies I work with, Zeppelin, right, which is a meeting workflow. It's a workflow automation capability. And we started with meeting workflows, which is a fairly common use case now. But a year and a half ago when Zeppelin launched, a lot of the feedback I would get was well, no one's ever going to let me record their meeting, and my clients aren't going to let, and then we were like, fine, I mean, check it out. But when advisors start seeing how efficient the the AI is when it does the meeting prep for you, it doesn't just record the meeting, but it does the task management post the meeting, and it integrates with CRM and planning and makes sure it's still using your system of record, all that kind of stuff. And when they actually taste the efficiency benefits and experience how much easier and how much better at a very high degree of quality the technology can perform, that's what starts changing people's minds, right? I mean, today this whole meeting workflow category is, got 10 players in it, and it's fairly visible, and that's just a sort of micro use case of how I think things will progress. It takes time, but the moment some advisors use something and they like it, I mean, there's other people in that business who are going to be talking to, and we've seen this happen time after time.
Yeah, to your point, we launched this like brokerage statement scanner where you upload the PDF, we extract all the holdings data or the transaction data from a document. And when we first launched it, that was the big hesitation was around like security and compliance. And everything's obviously secure, but that would end up being a yay or nay from firms just on their perception of that. Versus now, I'd say like the mid-sized and smaller sized RIAs don't even ask those questions. But then the wirehouses, when you chat with them, are still in that legacy camp on like we want it, but we can't pull the trigger because of like XYZ reasons when it comes to compliance or data security.
No, that's so true. And actually, it's for that reason why, I mean, I often think, and as the investments come into the RIA world, and as we're seeing RIAs grow to levels that they've never been historically, I think there is an opportunity for that segment, frankly, to have their experience leapfrog the more traditional large wealth management firm. I think there's a real opportunity there, and there's a couple of firms I've worked with where I can actually see how that could happen, right? Without compromising security, compliance, etc. It's just that you have a totally different decision-making process and framework in these companies, and I mean that agility, if they use it well, can really really benefit them.
So coming back to our previous point, do you think now with all these smaller like point solutions, I won't call Zeppelin a point solution per se, but just like startups that are focused on like one particular area, are forcing bigger firms to relax their requirements when it comes to procuring new tech? Like you take a look at the Kits' advisor map landscape, and there's hundreds of us out there, and people love to talk about it, which I think you look at other markets like sales software, or whatever, there's thousands of players within it. But do you think those firms now, those bigger firms, are becoming more adaptable to working with younger companies that are more nimble versus like a large incumbent who probably could launch that feature, but it's going to take another 5 years?
They're more open to the conversations, and in some cases they work with them. But time after time, I sort of still see them default back to, okay, we're going to build this ourselves. And from a strategic standpoint, you can see why, right? If you're a really large firm, rather than start to even risk compromising security, anything like that. I'm not saying actually there are risks, but at least you still have to go through that whole process. If you're thinking longer term, I think you are likely to say, okay, if we build this ourselves just on an ongoing basis, there's just a lot more ability for us to control the experience, to evolve it. Now, all that rests on a really big assumption, which is that, with all due respect to them, they have the resources, the talent, and the appetite to keep doing that work, right? And so, if you're a large wirehouse and you decide to launch a meeting workflow capability, that's great. But you need to be sure that you're going to be able to compete with people who are doing just that and evolve the experience at that rate. And not to mention that a lot of these, what you'd call point solutions, I think we're going to see a lot of them heading in a similar direction, which is trying to broaden what they do and get into adjacent advisor journeys. And so yeah, I to go back and answer your question specifically, I see more of an appetite on folks to have those conversations, but I still see them veering back to trying to build things themselves.
So on that note, on the tech landscape side, do you see, we started off with very large central point solutions like an InvestNet, and
Mm.
it's now been fragmented to such a degree where the conversation's moving back towards consolidation again. I'm curious your thoughts. Do you think we're going to head back to that direction now, where these companies either fold or they fold into a larger all-in-one platform?
I think there's a fair number of categories I could see that happening. It's like take again, whether you look at sort of onboarding solutions or there's just so many of them, right? That's the thing. Like the Kitses map that you referenced, I mean, it's a phenomenal resource. It's kind of hard to read it now because there's just so many of those firms. And I think they themselves would say that is Michael and his team, that, yeah, I mean, there's a rate at which these firms come in and the categories are proliferating and there's only room for so many. And plus, I think a lot of those companies, those smaller wealth tech companies, they're actually a great opportunity for these platform type firms to actually buy. Because if you're one of these slightly larger platforms, you can decide whether to build every single thing yourself, or you can decide whether to opportunistically actually buy some of these capabilities and integrate them. And so I think we're going to see more and more partnerships. We're going to see some of these acquisitions. And that story goes on, right? In any industry, you'll see categories get really interesting, and then people flood into it, and then you will see some degree of consolidation. So I think we will see some degree of consolidation as we go forward. The really cool thing in our industry is just there's so much new stuff happening, right? So it's not like in all these wealth tech companies. In some cases, yeah, sure, they're joining a category, and now instead of 5, there's 10 people in that 10 companies in that category. But they're also coming up with new ways to do things. And I think that's the really cool thing. I mean, you're seeing people come up with more and more new ideas of how to solve real problems.
Yeah, what I find fascinating is always taking ideas from other industries. And I found here it's usually closed off, like we are our own special use case, but that's never the case. And it's like taking ideas from like what is happening with like a SaaS sales team that we could apply, or like how does like um, a financial services company handle relationships? Is there like key points we could distill out to apply to this market? And as a builder in this space, I always find myself looking at like what do we do on our own company management side that could end up getting productized to help out an advisor that's not in the same sort of standard workflow they may be used to.
Yeah, totally. And if you are close enough to the clients you're dealing with and thoughtful enough in terms of hearing what they say, I mean, it's like many spaces where people won't necessarily give you the answer. Frankly, it's not a financial advisor's job to say, hey, this is the technology I need and this is what it should do. But they are very vocal, as they should be, about the problems they want solved and the biggest ones, right? And so, it goes back to that point I made around where a lot of these point solutions, I think the better ones will expand more and more into adjacent advisor experiences, and they'll start to look and feel a little more like, okay, we're giving you part of the platform. And similarly, I think what you see at the other end is those larger capabilities that I mentioned, looking to either acquire or partner with these smaller folks. So either way, I think it's either way we're going to see some degree of consolidation for sure.
Yeah. Okay. Very interesting conversation, Kabir. We'll put a pin in it for now. I would love to have you back on in the future. And then for any of our listeners, if they're interested in connecting, hearing what you're up to, the companies you're involved with, what's the best place they can connect with you?
Well, I think the best way is probably just ping me on LinkedIn. I don't want to get into like reading out emails and things like that here, but LinkedIn's probably one place where I suspect pretty much all or almost all of your listeners are on it. That's the best way they can get in touch.
Okay, amazing. Well, Kabir, thank you so much for coming on.
No, thank you. Thanks for having me, Cameron. This was fun.